morning, StockTwits Nation. It is Thursday, September 18th. This is the Daily Rip Live. I'm Katy Perry here, as always, with Shay Boloor and special guest and good friend of the pod, Evan Medeiros. What's up, gentlemen? How's the week going?
Howdy, howdy.
Are you howdy because you're in Texas? He's full
Yeah, I'm in
Texas
Texas,
now.
so I'm
Did you go line
full
dancing?
Texas. I didn't go line dancing. I went straight to a barbecue joint,
Nice.
Franklin's barbecue, and no idea what to order. I'm an Angelino, not much of a meat eater, and I asked them, "Oh, give me like a normal serving for myself. I want some brisket, some ribs." I finished a third of it, and that's all I could do. And now I had this like massive pile of meats I took to go,
Oh,
and I'm
man.
actually, yeah, it's a lot of food. It was great. It's good food.
You
It's
gotta
warm.
do it. Get some boots.
It's awesome.
Yeah. Evan, how have you been? Haven't seen you in a little bit.
It's been a little while. So, everybody's excited this time of year for like football season and like those pumpkin spice lattes. But I want to tell people that this is your cool weather grass season planting time. All right. So this is what I'm excited about. So after this call, I'm calling up my dirt guy, right? You guys have dirt guys. I'm going to get some.
I got a lot of dirt guys.
All right. You got dirt guys. We're going to get some loam delivered. We're going to plant the grass because you only get 2 times a year to work on your lawns. So that's kind of what's exciting over here.
You're literally touching grass.
I'm taking it a step further because like I heard that, right? And then I was like, no, I'm going to like get the dirt. I'm going to plant my own grass. I'm going to level my stuff. So yeah, it's
so that's happening today. You're not trading today. You're dirting.
Oh yeah, I'm going to be in the dirt.
I'm jealous.
And now I'm entering that new stage of my life as a married man. I feel like I'm unprepared now, not knowing the gardening seasons.
wait. Yeah. Wait till you get the home ownership and all the maintenance. And then,
you got to get a deer, Shy. You got to get a John Deere, ride that puppy around.
Oh, yeah.
That's the American dream right there. Like, I live in Manhattan. I want a deer, though. Like, I want a John Deere. And I just don't know if it's ever going to be within reach for me.
So, yeah, that's what's happening over here.
Well, that's exciting stuff. We got through. Yeah, we got through the big Fed meeting that everyone was anticipating, but knew what was generally going to happen. I'm curious, guys. Shy, I'll start with you. Any hot takes from Powell's comments? What we saw yesterday? Any surprises? What was your read on that?
He essentially, in my read, was it's equity markets is becoming somewhat of a bubble. Not my problem. It's like not my monkey, not my circus, is what he was kind of saying. Where I'm trying to tackle inflation. I'm trying to tackle all these macro things. I can't do anything about the equity markets. Clearly, POTUS has his own reasons on why he wants it bigger, and I'm not going to be fighting it anymore. So that's my read. I was just like, not my problem, turning his back. And then also the 2% target by 2028. Like, I just think that it was dovish, but was also DGAF.
Yeah. Wait, yeah, that's a really good way to put it. He's just like, yeah, whatever.
It's checked out.
DGAF is a good one, guys. If you don't know that one, Google it. Evan, what was your take on that?
Yeah, I mean, I don't have a whole lot to add here, but I mean, it seemed like, it's kind of the most obvious meetings we've had in a while for the most part. I mean, there was a crowd, really pushing for that 50 bips cut, but it seemed pretty widely telegraphed. I mean, I guess the good news is he was talking about labor market weakness a handful of times, and it was dull. I think yeah, Shay kind of phrased it well. So seems like the path is pretty clear. It's good to get it out of the way as a trader, and yeah, let the good times roll, I guess.
Yeah, he's ready to go touch grass. He's like, let me just get through this meeting, and then my dirt guy's gonna come over. And I can just
get this presser wrapped
pretend
up.
This isn't my nightmare of a life.
Right.
Let's turn to the big corporate story of this morning, though. Nvidia making a $5 billion investment in Intel. Intel shares surging nearly 30% in pre-market trading on the news, giving Intel a boost, but stops short of the manufacturing partnership that some people were looking for. Shay, I know you had some updates on this on your side over at Futurum yesterday. What should we make of this?
Yeah, so Futurum covers both companies. We found out about this last night. We were part of the debrief, and it's big. It's a big move. It's kind of one of those moves. It's going to be in history. We have Nvidia taking an actual 5% ownership stake, essentially, of Intel, and that is massive to the point of which companies are now going to get delevered from this move. And the first thought, obviously, for me is Foundry. Like when we saw the debrief of, wow, Nvidia's on the call and Intel, I thought initially Foundry. It was not the case. It's more of a Nvidia wants to broaden their product roadmap. So a lot of the conversation was less about like who's going to get penalized. It's like we want to include Intel now, CPU into our GPU AI data centers spiel. And I think that that's accurate, but long term, there is Foundry implications for this because the long term prize is obviously manufacturing. And Nvidia has always been clear that this isn't about um, GPUs moving off of TSM right now because that is still the chef's kiss on all Foundry. Intel is its own biggest customer in their own Foundry. Nobody else can compete with TSMC. But co-designing these CPUs and SoCs stocks with Intel will now be step one towards eventually hoping to fab NVIDIA chips at Intel Foundry. NVIDIA, everyone wants to deleverage themselves from the eastern part of the world, and NVIDIA wants a backup plan if you just never know when if China gets put in a corner, what they're going to do to Taiwan, or if Taiwan ever gets disrupted in some weird way, or TSMC's capacity gets like tight. Like they need the demand for AI is so freaking high right now that you need that AI factory to constantly be running at top speed and fulfilling the demand. So I do think that way too early to say that Nvidia is going to go on Intel Foundry, but now there's so much incentive for for Nvidia to have Intel be that second foundry because they actually have equity stake now. It's going to be a situation where I don't know, it's like a CoreWeave type of thing where Nvidia like gives CoreWeave a lot of revenue, but really it's backed by Nvidia. Like
Yeah.
it's a win-win, and I think for Intel it just shows that they were in such a mess that they needed the U.S. government and Nvidia intervention just for them to be on the AI roadmap. We can get into it later on like the secondary effects on AMD, ARM, ASML, but like for Foundry is the biggest long-term winner of this deal, and hopefully with the backing of NVIDIA, like the engineers, NVIDIA engineers and Intel engineers, they've worked together for a long time. On that
Mm,
call, a lot of the conversation was like how well they mesh well together. So this
yeah.
made sense. And Intel deserves to be $35, to be honest, plus.
Yeah. What were the analysts on the call? Was there any themes among the types of things they were asking about?
Yeah. What's the which companies will get taxed essentially on this? By tax, I
Um,
mean, who's gonna get penalized because of you providing a crutch for
yeah.
Intel? And I think that obviously it's first thoughts ARM. Like ARM holding is going to be somewhat of a digestion period of trouble because their whole spiel has been they're positioning themselves at the future of data centers. They're cheaper, more efficient, clean state architecture. They provide the blueprint of the new digital economy. So you have hyperscalers like the AWS Graviton, and I think the NVIDIA Grace. Like they were testing a narrative and it worked. But this deal basically says now you don't have to hop off of Intel to now scale your AI in your data centers. You can stay now in Intel on the x86 because now the architecture everything already runs on. You can have the NVLink built on top of it and keep all your software um, compatibility, and you can still scale AI clusters now with NVLink, like I just mentioned. Like it's no, you're not incentivized as much to bounce to go into ARM. So that is
Mm,
a huge incentive not to jump ship, and that's why there is somewhat of a risk rewriting workloads now for ARM. There always is risk migrating workloads off point A to point B, and there was enough of an incentive to do so because Intel was so far behind and ARM was so efficient. But now with the help of NVIDIA on their NVLink, like it might slow ARM's adoption in the data center materially on the CPU side, but I think they knew this already. Like you've seen the past couple weeks, maybe the past couple months, like ARM has been positioning themselves away from CPU-ish to becoming that AI player. And I think that they had to do that move. But
yeah.
now the stock has been trading at a premium, always has, because of that. We provide the blueprint of new digital economy. That gets dented a bit. And I just feel like either ARM pulls back due to that re-rating, no more same premium, or it just feels stuck for a long time until things get less noisy.
Yeah. And Evan, I know you were pulling up ARM on the technical side. Any of these names, ones you track, seeing anything interesting from your vantage point here this morning?
I wish I got the call to like invest in some of these Intel deals early, right? Do you think we can get like a daily rip?
You're too busy outside
SPV?
in your lawn, Evan. You got to be locked in. You know,
I'm
Shai's
not
locked in.
I'm not committed enough. No, I mean, sadly, I guess I did just wrap up a short. One of my tactical trading systems had a short in ARM covered yesterday, so I guess a day too early. Didn't really go anywhere. I don't really have too many other reads. I would be curious on ASML or ASML on Shai's take there later,
Yeah.
but no, generally speaking, like, one of the observations I was going to have just generally in terms of semi space is like Nvidia relative underperformer recently from just a pure technical perspective. So if you throw on Nvidia versus like divided by SMH, for instance, you've seen that drag. Now we'll see if things start to flip and put in some type of floor after this move. But no, that's technical wise. I mean, semi's still holding up.
Oh, I will say for ASM, this is a major tailwind for ASML.
Okay.
I think ASML and Synopsys as well, like they both had an Intel problem. That just there's nothing that they can do. It's out of their control. Again, if Intel hopefully becomes more quality and they can actually become a real foundry, like this is going to cause them to produce a lot more advanced chips. It's going to cause a chiplet explosion. So that chip, when you think about chiplet, you have to think about the GPU tiles, the CPU tiles, like all these interconnects. Like every chiplet requires a lithography run. That's ASML. So more chiplets equal more wafers equal more scanner demand. So ASML just doesn't really profits not just from selling a machine, but it's an ongoing service. Like there's constant maintenance and parts they have to do over a 20-year life cycle. So they really needed, and like I think when you want to invest in Intel, I've been telling people like, okay, you could, that's risky, but if Intel succeeds, ASML is gonna be a massive beneficiary, and that's not as risky because everyone still needs EUV machines. Like it's not TSM uses ASML, for example, through Nvidia. But I think that ASML is gonna be a major winner because they have a monopoly in what they do. China is decades away from creating any kind of competitor. It doesn't matter what FUD you see on that. And I'm not surprised that it's up 7%. It honestly might be up more because it is undervalued. It's at 30, it's 33 times earnings now. It got, oh, it's at 900. Yeah, never mind. I thought it was at $700. It was at 700 recently.
Yeah.
So it
Wow.
must have caught a bid.
Yeah.
It did. Yeah.
I know, Shai, you have like a really helpful way of framing like what these players in the space do. I know there's like the Kingmaker. Where does ASML fit within kind of how you talk about what role each of these play?
Yeah. So, Nvidia, first off, like, we can start with Nvidia because they just showed overnight. I know it took months for the two companies to work together to figure out a merge, but they are truly the kingpin of the new digital economy, where they are the GPU engine. They can decide who gets what and who gets penalized. Like you saw AMD start trickling in of like, oh, maybe a new competition, especially in the new racks. They saw that ARM is not becoming Switzerland anymore. It might become an actual AI player. They just pivoted and screw them in the immediates by doing this deal. So the way I would think about it is, I like to say TSM is the AI factory. I do think ASML is a lot more of the kingmaker. So think about it as Nvidia pushes like these performance envelopes via their GPUs. TSM provides the manufacturing, and then ASML supplies all of it. So like, they capture the margins no matter who wins the chips. But you have to think that there's three monopolies: Nvidia GPUs, TSM the factory manufacturing, and ASML with the supplies. Because TSM can't survive unless they have ASML machines to do it. And ASML just had a massive China problem because of all the competition on lithography that's being produced there, and an Intel problem. And there's nothing they could do about either of those. Now they finally have that tailwind for Intel, and I do think it's one of those names that it deserves a premium. Like I know TSM is undervalued because it's got geopolitical risk, it's justified. But the other names, I feel like they're all trading above 40 times earnings right now. Like, it doesn't make sense. Like, I can see ASML doing that as well.
Yeah. And Nvidia's had their hands full on other places this week because they had obviously knew the Chinese government banning local businesses from using their chips, and then Huawei flexing their own muscle. So they had their Huawei Connect event in Shanghai, I believe it was yesterday, unveiling Atlas 950 supercluster, which is a system built with in-house Ascend chips. So they're trying to scale out, they're trying to beef up. Nvidia's making moves in other places. On the technical side, Evan, yesterday we had Jake and Jeremy on talking about China trade. I'm curious, I know this wasn't on your short list, but if you're watching that, because they were talking about sort of this rotational nature of those stocks where one goes, another one goes, and Jake was talking a lot about conviction around JD at the moment. Are you watching that from like a regional trends standpoint?
Yeah, for sure. I mean, international stocks broadly, but China specifically, I mean, everything outside the US is working beautifully this year. It's not just a US story, which is something, and we can contribute the weaker dollar and lots of other factors to these trades, but I've been watching KWEB specifically. I tend not to go individual China stocks, but KWEB, um, I'll pull up a chart. Well,
What's
I don't.
KWEB?
It's an ETF for China's names,
Oh,
internet
Oh, yeah,
companies. Yeah.
So yeah, usually if I'm playing, I am playing on like a KWEB type of situation.
okay.
So this is long-term KWEB chart here. It's a weekly chart going back to 2022, but like from a technical perspective, right? I mean, the technicians are going to love this, right? You got this nice sort of bottoming formation, this accumulation range, if you will, but a stock or an index or an ETF goes sideways for multiple years. Bigger the base, right? The bigger the breakout. That's sort of the saying and the ethos behind it. And you can see that KWEB just recently over these past few weeks has been running, and this is going to give a tailwind to just write down that list, right? There'll be
Hmm.
fits and starts along the way, but I mean, if this base breakout holds, right, and we're looking at higher KWEB here, I mean, that's just going to translate to your JDs, your Babas, everything
Yeah.
else down the list. And you could look at FXI, the different China ETFs, and then again, ACWX, the international stocks, just generally, they're outperforming this year, and so
Yeah.
there's lots to like in that space. I do think I have some trades on here, but honestly, I don't. I'd have to go look at the tickers. I
It's
think I
okay.
have some China exposure on
So
in the
Yeah.
portfolio.
I do want to add some more color on the Nvidia in China.
Yeah.
It's like so funny how much that FUD gets generated because
Yeah.
it's
Mm,
such BS. It's the biggest BS in the world because even if they lose that demand on China, it's
Yeah.
I made a post about it earlier. It's gonna be lost demand. It's gonna be rephrased as smuggled demand. They're gonna get that elsewhere in some
Yeah.
other avenue and channel. And to think that at this stage where we're at in AI right now, if China deleverages themselves or makes the internet companies like the Alibabas, GDs, ByteDance, like not use the best of the best, that's gonna hurt all Chinese companies from
Yeah.
participating in the AI arms race. Like it's like telling the you're in the middle of a marathon and you're telling your runner that's like in second place, like, can you change your shoes right now? Because I don't like the messaging of your shoe brand. And if you do win this race, like I want a better shoe brand when you win the race. Fine, you could do that, but that couple minutes of changing your shoes, like tying on, like you might still participate, but there's a mass distance now all of a sudden. You don't
Yeah.
do that. So I
So
think that it's just FUD that will get recycled probably for the next like year or two every couple months.
when you say FUD, you mean that gets they say these things and they're not actually enforceable, or that it's actually not going to really matter that much to for Nvidia because they'll just go sell chips elsewhere.
Yeah, I mean the inference demand will just scoop up that
Okay.
gap, but
Yeah.
also on the China front, like it doesn't make sense for them to do that because you can't fall behind in this new arms race we're in. Like
Yeah.
AI is an arms race, and if they fall behind due to the quality of how they got there, like it doesn't make sense because it feels like we are already winning due to Nvidia. Like Jensen has become the savior of us maintaining our lead in the world for
Mhm.
decades, thank God. But there is some room, like if some China catches up somehow on the quantum front, that's worrisome, or AGI, like
Yeah.
that's national security elements.
Yeah. It's funny when you say the FUD because it is Jensen Huang's comments following this news I thought was funny because he was just like, yeah, I'm disappointed. It's like, it was like kind of very muted. He's like, yeah, I'm disappointed, but like, whatever. That's all he
How
had
anno
to say.
how
Yeah.
annoying is it for him? Like, the amount of mental capital he has to use for this BS,
He's
that's
so,
clearly
yeah.
political pawn. It's just a political chess game right now.
He is, yeah. Nvidia is just like every other day. They're just like, I guess, what is it? Heavy is it? Who wears the crown? I guess. Uh, Speaking of people who wear crowns, let's shift to Tesla because
Ooh.
we've been talking a lot about Elon Musk's $1 billion investment back into the company. Evan, I know you have some thoughts generally on Tesla as a case study, and I'm curious, what's been on your mind lately with those guys?
Yeah, so I'm gonna take us down to trader school for a little bit here. So allow me to
Okay.
take a moment to set this up. So yeah, Tesla's been running recently, lots of good news, but let's time travel a little bit into the past. And I want to just put our trader hat on for a moment and speak to all the kind of the technicians out there. So we run here at the Trade Risk, a few different quantitative models. So they are sort of run algorithmically without my input. One of them is a momentum model. So in Tesla, we originally got into Tesla back here in April at this 285 zone, and we were looking good for a couple of weeks, and then we had this big kind of rug pull here. I think this is when Elon left the White House, or the whole spat with Trump and the
The black
tweets.
guy.
Yeah, oh yeah, the black guy.
Someone kicked his ass. We still don't know who.
That's right,
Probably the kid.
black eye for the portfolio too.
Although with the recent headlines coming out, it might be Bissett.
That's true.
I don't know.
Yeah.
Anyway, keep going.
Yeah. So that's what that was, and so what that did is that caused our sort of algorithm here to kind of spit it out and just kind of puke the trade out, because this one here is kind of momentum driven. It's looking for forward advancement. It wants to see progress to stay involved in a trade, and the rules are ruthless. So you kind of get in here, and then a few weeks later, you get out at break even. Okay, so basically a scratch. Then it jumps back in again. So a couple weeks later in July, here we go again, getting back in at a higher price, all in this consolidation. A few months later, and we get the same thing. We got earnings, and then we get this drag down, and then we puke it out again, -6%. And so the trading psychology here is kind of tough, right? Because you're continuing to get these signals to get back into this stock, right? It's time to get in. It's time to get in, and then you get in at a higher price, and then you gotta get smacked down. And this is the opposite of probably a Shy here, which has a thesis around a nice fundamental, story that he's going to stay comfortable with, smaller position size, and not going to worry about all these little zigs and zags. And now, so we take the lump there again, and we get our third signal. And so recently on August 11th, our model is telling us to get back in. And the reason this is kind of education from a trader perspective is there is no one that, when you reach for the cookie jar twice and you get your hand slapped right after and you go for it a third time, you are going to not want to take that trade. You are going to say, nope, I'm done. I just learned my lesson from, failing to get momentum in this stock. And this is where like having a rules-based systematic process, when you can kind of just be very zen about it, take the trade, right? If you've got a good sample size and you've got a strategy that has lots of occurrences of producing an edge, you need to try and fight the urge not to take the trade. And so we're back in Tesla now. And I also think it speaks to why these ranges are so psychologically important to pay attention to. A lot of folks will say, well, technical analysis, it's all voodoo, and we don't use it to, I don't use it to predict price movement, but you need to understand the psychology of the participants that are transacting in this range. And you got folks like me, right, that are trying to take signals. We're trying to get in here, right? We're trying to play this Tesla story, and then we're getting stopped out. And so my friend Brian Shannon, right, he's got that popular, I think it's his saying of, if they don't scare you out, they'll wear you out.
Mm-hmm.
And this is what's been happening here for Teslas. They're wearing people out in this range. It starts and then it drops, and it starts and it drops. So all is to say, now we're back involved in Tesla. The difference here is we are seeing a lot more volume come in down at the bottom of the screen. So there's just a lot more urgency. There's more commitment here. It just looks more promising that this breakout is willing to stick. And when you think about the Tesla story, and I'm sure Shai could add plenty of color to this, you know, Elon Musk at this point is pissed off everybody, right? I mean, he's pissed off the left, the right, right? He's very controversial on Wall Street. I mean, the stock is just, it's something that's difficult to own, except for the diehard zealot. You know, of course, there's that diehard tribe, but it just feels like with such a big TAM in front of them, with robotics and batteries and energy, and a catch-up trade of underperformance, because again, from a monthly perspective, this stock has gone nowhere since 2021. It's been dead money.
Yeah.
So again, you talk about, now you put all these elements together, you got your short-term kind of breakout with an expansion in volume. You've got your 4-year sideways range where the stock has gone nowhere. You've got this huge TAM in front of this company if they can execute. And then you have Elon Musk now repurchase or buying on open market $1 billion worth of Tesla. You've got a very explosive sort of cocktail setup here brewing for, I think, all-time highs. I don't see why we couldn't be at 500 plus into the end of the year here with Tesla. I think the story is there. They need to execute, and you know, Elon just needs to not ruin it by tweeting a bunch of stuff. So
he's been keeping a low pro. I feel like he's
yes,
got some coaching maybe, or I don't know if he listens to people around, but I feel like, I don't know. I feel like he's been kind of focused on this stuff, which the market seems to like.
yep.
Shai, you talk about kind of this future on the thematic side that he's painting, and Evan saying could be all-time highs here soon. How quickly I know this, he's in development with the humanoid robots and all of these things. Like, how many years out do you think that is from true commercialization? Where, like we talked about earlier this week, like what a company makes, FedEx decides to buy, you know, a small army of these things. Is that like 2 years out, 10 years out? Do you have any sense of sort of the commercialization timeline for that?
I mean, people I talk to even in the company, like they don't even really know.
Yeah.
It ranges from end of next year to 2028.
Yeah.
But I think it's really important to know though that the establishment of the S curve is even more important than the actual fundamentals. And what I mean by that is order flows will happen before they actually have to produce those orders. Market's a forward-looking mechanism. As soon as those order flows in the backlog come in, the stock will get re-rated according to that. That's what I think, that it's small potatoes, a bill from Elon, but I think it's more of a sentiment of first time in 5.5 years. Is the S curve on embodied AI platform closer than people anticipate? If so, there is so few opportunities in the stock market right now on category leading winners of massive secular growth themes. Physical AI, there really isn't that many players out there. You have Amazon, who is a very quiet leader in the logistics component, but everyone else in the private markets, and they're getting ridiculous valuations from these robots who are just moving this from here. Now it's $40 billion.
Yeah.
Doesn't make sense to me. So I think that the way that Elon's trying to solve physical AI is the most scalable way. It doesn't matter if it's a robot or a car. It's he's trying to create a human brain that you can put in any kind of hardware, and that is so scalable on the TAM. And
Yeah.
as soon as we get some deal flow, I think that's why it's catching a bid, because there's just not that many opportunities out there for potential massive winners of robotics and AI left. And it's been basing for 4 years. So now it's
Yeah.
just breaking out.
What about all the robotaxi headlines and expansion there? Is that something you think is short term, you know, moving on headlines and excitement there too?
I think this is less about that, mainly because it's gonna, yes, whenever Tesla can drop a robotaxi in a city, it's gonna scale much faster than a Waymo.
Yeah.
But every city is its own snowflake, and that's
Right.
what's so tricky about it. Where something in Denver won't work and something in San Francisco.
Yeah.
And it's just gonna take a while to scale up for that. But it is a lever, like a tailwind, like how quickly like Like San Francisco alone, if you look at how much they're expanding bigger than Waymo is, and they both kind of started at the same time there, it shows, wow, this really could scale quickly. And I think that humanoids is really what's driving a lot of the narrative. Like humanoids is like that alone is a $1 trillion opportunity, humanoids. And
Yeah.
robotaxi is probably another $1 trillion once it scales. And we're not talking about the energy business. And
Yep.
I think maybe the car delivery numbers might be better than expected on the EV side because he became less political and consumers. Like I don't care what you say. If you won't pay more for a Camry than you will for a Tesla at the end of the day. You just won't. Doesn't matter what your political belief is. Like maybe it was hard when Elon was screaming every day, but now he's been quiet for months, hibernating. If he maintains that in a couple months, consumers won't care. They just
Yeah.
won't. They're gonna go for the most convenience, and once autonomy really does scale, that's a difference maker as well.
Yeah, it's crazy that I've been out of the car market for a while, but we're a one car household and we're like, I think it's time we need, with all this dirt we're moving around, we might need a second car.
Get a truck, Evan.
Right. But when you actually begrudgingly looking at some different vehicles, and it's like the Tesla is so bloody economical. It is so cheap compared.
Yeah.
You get so much car, and it's like love them or hate them. It's like, wow, the value prop on that car now is insane. So I hear you there.
On the, I mean, we don't talk about the, EV stuff on Tesla. That's rolling. We talk about the future picture, but
Yeah.
do they have any? I don't know, Shy, if you know any of like, any mid-sized vehicles in development, like on like similar to a Rivian, because they have the Cybertruck, which I think is like a statement, right? Like Evan, you're not gonna like move dirt around with a Cybertruck. That's like that's a prop for your life because whatever you're going through at the time. But like, like are they trying to expand the range of these, or is it focusing more on just like, okay, we know we want to have autonomous driving and this is the type of car? Because you don't hear a lot about sort of that middle section.
So, I mean, I don't think, honestly think he is like not giving an F anymore about product innovation on the EV side. I
Yeah.
think he was like, we have our pillars. That's enough for us to scale autonomy. Like, I think he just doesn't want to like sacrifice capital or
Yeah.
bandwidth on his team to create another derivative of their cars because those are just the bones of what he wants to create for the future. And I think I love that.
Yeah.
I'm all for that.
Just a vessel. I mean, we talked about Waymo. They announced they're gonna have ride pickup at the San Francisco airport. I was there a couple weeks ago. I waited 25 minutes for an Uber to pick me up there, and I was like, "What in the like?" I'm like, "This is San Francisco. Like this is where Uber is supposed to shine." And apparently, they do 25,000 rides a day there. So that when you talk about the scale, and then at Waymo making an announcement with Lyft this week. Lyft's up 40% this
Cool.
month. Like,
So I wrote a note a couple weeks ago. I was like,
okay,
the
a
quiet
memo.
winner, quiet winner of all this might be freaking Lyft. And why is that? Lyft has an Uber problem. Like Lyft has a massive, like they can't scale the way that Uber can. They don't have the balance sheets. It's bad economics already. These like ride sharing services. Now that's been penalizing Lyft for a long time. What does autonomy solve? What does AI actually solve? It makes everyone efficient. Doesn't matter the quality of what you have, it makes you more efficient. It gives the Davids a fighting chance against the Goliaths now because of this massive tool that's going to help everyone apples to apples. Like I think Lyft is going to benefit because they have the bones. Like I said, they have the services. They just weren't able to scale it at the same pace that Uber was because of their situation. Now AI can solve that. So I think that Lyft is very undervalued, but they have a fighting chance now for the first time, I think, since back in the heyday when they like
In
rideshares launched.
2021, yeah.
Yeah,
Their
that
high was in
maybe
the
they have
60s.
maybe they have a chance. Like truly do because they have a network that all these autonomy players want a part of. Like, why do you have to just do Uber if you're all these autonomy players? Like, you don't. You do both. And now Lyft is just gonna go. There's maybe they'll price gouge each other, Uber and Lyft, but like I still think Lyft got priced for death essentially for a long time. Maybe that's not the case. And of course that I said that before this like partnership. I didn't participate in the trade at all. All right, I need to stop saying it and start trading and saying it first.
I'm gonna build a shy portfolio. If you say something, I'll go trade it, and then
Yeah.
I'll give you a cut of it.
Yeah.
But yeah, Lyft is, you're right. Like I hadn't heard about, they kind of can piggyback this innovation, and just anecdotally in New York, I know a lot of people like Ubers are crazy expensive. Yet last night I was trying to go 10 blocks and it was $49 it quoted me, and I was like, all right, I'm walking. But a lot of people, you pull up Lyft, it's like literally half as much. And so on the pricing front, maybe they're trying to like get back in the mix, taking a little bit of hit on the margins just to get people back to using their app, because in some places the Uber pricing is like insane.
Well, it's not. They don't even have to compete with Uber. It's like let's just make this up. I don't know the market share, but I'm assuming Lyft has a minority market share. Even if it goes from like 10 to 20%, that 2x delta is massive for Lyft's like business case.
Yeah.
Uber still can get, it's not a zero sum game. Like Uber can get 18, 80% or whatever it is, but it's just going from micro to now just minor. That's a different story for Lyft.
Lyft, man. Remember they used to put those mustaches on the cars? That was the time. That was weird. I'm glad
That
was way back
there,
in the day.
Was there any news on Ethereum? Because Bitcoin mine is blowing up right now. It's up
Well, I was
11%.
just gonna shift to that. Because Evan, I know you've been following.
Yeah.
You had Monster, you had Strategy, excuse me, you have ETH, Bitcoin miner. Like what are you seeing, Shy? And Evan, what have you been tracking?
Yeah. Yeah. So Bitmine, I do have a position there, and let me see if I can pull up some charts here. My charts just crashed. Shy, while I pull this up, are you involved in this one or?
I have a I literally only have 150 shares of Bitmine just to track it.
Yeah.
But I don't know. It's the thesis is so simple because there's going to be legislation that's going to help Ethereum.
Yeah.
Who's going to benefit the most is
Yep.
Treasury. They have a great story.
Yep.
You're noticing right now the theme of 2025 has been story stocks, like narratives. That might go away next year, fine. But until it does, like if you have a good story, there's actual hard paper on why you should catch a bid, aka legislation for Ethereum. I think there's no world where it doesn't just continue going up and up, especially on the technical front. Like as soon as I forgot what the level was, as soon as it broke it, it just really was like, oh, whoa, am I actually topped the previous high? And now it's like breaking out immediately, up 11% right at the open.
Yeah. Yeah. I think, so I've got a handful of thoughts here. Ironically, like I'm not the biggest Ethereum bull, really at all. I'm kind of neutral on it. I think there's plenty of opportunity. But I am actually very bullish on BMNR. And it is a little bit of the Tom Lee effect, because I do think Tom Lee is kind of this current cycle, at least for crypto. He's the Cathie Wood of, when ARK was running back in the day, right? Like this is what this reminds me of. Tom Lee, the difference between like, again, a BMNR versus like a Bitcoin treasury company, I think Tom Lee knows how to sell this to Wall Street. He knows how to be a shareholder friendly like executive, and he knows what they're looking for. And I think that's extremely important right now. So a lot of the oxygen is being kind of sucked up by these Bitcoin treasury companies for good reason. And again, I love kind of a lot of them, or I think there's good potential there because I believe in Bitcoin as the store of long-term value. However, I do think that Tom Lee knows how to produce cash flows and show positive EBITDA earnings on a treasury company for digital asset. And I think through staking ETH, restaking ETH, providing liquidity, doing these moonshot investments to other Ethereum ecosystem plays, I think he's going to run the table here on being able to really kind of catalyze Ethereum. And honestly, and I think all the developers are going to vomit on this statement, I do think Tom Lee is very important for ETH right now in terms of getting Wall Street to focus resources and to get dedicated teams developing in this ecosystem, which is important on a multi-chain kind of world. So I do have a position in Bitmine, despite the fact that I'm not the biggest ETH fan out there. I'm sort of a skeptic. So we'll see. But go Tom Lee right now is kind of my motto.
Also, like, I mean, the people I talk to also in that space, like a lot of people learn from Cathie Wood.
Yeah.
Because Cathie Wood was the first kind of to do what she did. And unfortunately, the bubble happened. They learned about all the flaws. She disrupted, but she also, like, she kind of didn't take her foot off the gas pedal on the narrative, all that stuff. So, like, I think that a lot of people learn from her mistakes. And now there's a lot more people who are kind of Cathie adjacent that's coming to light. And they're positioning themselves accordingly. Like, as a treasury play, like, it's kind of crazy concept where, like, you don't need to do work because something else is doing it for you, and like you just raise capital to buy that thing. It just feels like you're just coasting on someone else's coattails, like in a way. But I mean, it's easy, but it sounds easier than it should be. Tom Lee though, there's few that nailed it as much as Tom Lee has in the past like year or so, couple years. Like he has really nailed the V shapes. He's been very adamant about when to buy, when to be a little squeamish, and he has a great track record now.
Yeah. I think if you're going to invest in a treasury company, whether it's Bitcoin or ETH or I guess anything, I mean, you are making a bet on that the future is going to look very different than what it does right now. And so I think if you're buying into strategy or Bitmine or anything else, Metaplanet, I think you're taking a little bit of a leap of faith that, like right now it's just about stacking the underlying asset and we can play this MNAV game and we can harvest shareholder yield and all this stuff. And it's a little adversarial to shareholders right now because you got companies that are just basically selling the float out from underneath you and turning that into digital assets. But I think if you flash forward to 3, 4, 5, 6, 7 years, right, which none of us can predict what the heck this landscape's going to look like, but if you believe in the underlying asset that it's going to compound at even 15% a year, 20% a year, some of these companies are going to be huge and they're going to have a lot of capital to do some interesting things with and maybe generate more yield and function more like a future bank or something to that effect, right? So I think, I think a lot of folks get stuck on just this MNAV flat linear calculation. That's like the present day, but there is a big, wide open universe of, new things that will be coming down in the future. And so there's some, growth and leap of faith you got to take, I think. But technicals for Ethereum, just because I got this chart up, I mean, again, not the biggest ETH bull, but you got to just love this chart. And I think, God, if we start breaking out here to the all-time highs, which we flirted with, I think we briefly broke out a couple weeks ago, and then we kind of pulled back and consolidated. But I mean, if we start moving above 4,800, I mean, you got blue skies ahead. You got Tom Lee pushing. You got other treasury companies coming in to buy up all of this, OTC float. It's just it's a tough trade to want to fade. And I think the last thing I'll say on like Bitcoin and ETH here is that it's people have forgotten about it again in this just brief 3-month consolidation, and that's a beautiful thing, right? Because when there's so many other things working, when the Nvidia, all the other stuff that's working right now, Tesla, money leaves this space, right? And you don't need to chase or take the risk, especially if you're a traditional Wall Street firm, on crypto, if that's still seen as edgy and too alternative. You don't have to chase those returns if there's other things working. The moment those things start to slow down and now Bitcoin starts to get back up towards those highs going into the Q4, which is seasonally just such a strong period for, risk assets in general, but Bitcoin especially, it just seems like a good, setup here for Bitcoin, Ethereum, most of the treasury companies and all that fun stuff.
I think when you bring up Tom Lee, Evan, I think it's so interesting that he has now become sort of the face of ETH. And it's not Vitalik or Vitalik, sorry. And it's such a sign of the times.
Vitalik.
Clip it.
Vitalik, 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 Buterin. God. Thank God I caught myself with that one. Vitalik, that's a new one.
Vitalik, wow, that's like the
that's a new one. This is what he's going by now. I'm Vitalik now. I'm on Wall Street.
We don't even know the guy's name.
Vitalik. But Tom Lee, you see ETH, you see Tom Lee, you see ETH, Tom Lee, and it's like it is moving this like TradFi, DeFi, it's all becoming one thing. It's all becoming Wall Street. You see it with these companies. It's just such a sign. Like put those two guys next to each other. It's like they're in the same narrative somehow right now. And it's wild to think about where we were at 5 years ago with crypto. And people like Tom Lee now being kind of the name. So I'm just like curious, like those guys talk. Are they in a group chat? I don't know. Um,
Yeah, I
but
mean, I think he has expressed that he's worked with Ethereum Foundation. I think they're
okay.
donating there and just working on research. I mean, again, I think he is going to be a very shareholder friendly executive here. And he knows how to just, bring people and attention and to help kind of grow the space for ETH. I also think there's one wild card here, and I just can't believe how much of a bull I've turned on this stock, because I know when it first launched, I was like, oh my God, garbage. I don't even want to touch it. Like, and now, when you start to really think about it and play out the way this can all kind of unfold, it's like, wow, this is actually kind of a good, at least a trading vehicle. We'll see if it's a long-term investment. But anyway, but Tom Lee, I think specifically, is he does hold Bitcoin on his balance sheet treasury too, right? It's not
Mhm.
much. It's, minuscule compared to the amount of ETH he holds, but there's not much of a doubt in my mind that Tom Lee, he's a huge bull on Bitcoin. I think he would stack Bitcoin. I think he would go to where the attention is. And if that's Solana or another chain, I think he's going to really try and be some type of Berkshire Hathaway of digital assets. That's such a
Ah.
big statement. That's the sense I get. And so I think the play here is fairly substantial on where he could take this. So that's just some thoughts on the stock, but
Well,
it's getting a lot of love right now.
and Evan, do you have any thoughts? Solana, Galaxy just bought up
Yeah.
a ton of that. What do you make of that move from them?
Yeah, I mean Solana. I was a big bull of Solana. I thought Solana would essentially kill ETH. I don't know that I fully believe that still. But yeah, and that's the tough part about betting on any one of these underlying layer ones, is that they are sort of fragmenting liquidity. And that's kind of the bad part about a lot of this stuff too, is because when Tom Lee's pushing Ethereum and he's trying to get Wall Street to develop there, the problem is you're fragmenting these pockets of liquidity across the digital asset space. And that's not a it's not a great thing, because you you really want everything to kind of play nice. You want a big sandbox. You want to be able to take your collateral and your real world assets and be able to use them in all these different functions, right? And so Solana, yeah, I think is interesting. There, I think I haven't looked at the network activity stats. They slowed down a little bit compared to the big boom that they were in. But with ETFs coming, I think Ripple now is getting an ETF. I mean, it's just a space where it's kind of open air to build and develop. I think Robinhood actually shows this amazingly, like with all this new legislation and all the stuff that Robinhood is rolling out. It is time to build for all of these companies, right?
Mm-hmm.
And so you're going to start to see these announcements. All these companies are cooking right now, right? And so you're going to start to see all these announcements come out on what we can do with some of these digital assets. And I think that's exciting. So yeah, Solana's great. I don't own any, or I don't think I own any anymore, but
Evan, the metric you just referenced, basically showing like activity around building with the asset. What is that called, and where would you find that?
yeah, so there's a lot of dashboards actually. So you can kind of just track how many fees are being processed through the network,
Mm-hmm.
and just how much token use trading there is, how much token usage there is, how much staking there is, and how much stablecoin minting there is too, which is like a hot trend right now. So you can sort of track where all the issuance of these new stablecoins are happening, right? And so lots of folks will use these on-chain analytics. I have just a bunch of custom Dune screens, but there's some other websites that their names are escaping me off the top of my head, that you can kind of track the network activity. And I did spend some time back in the day looking at like trading systems that would, kind of leverage the on-chain data to then translate it to expressing a trade on the underlying asset. It's a little tricky. I think if you're longer term, you could use some of that stuff, but for short-term stuff, it's kind of difficult. But it's important to see what's showing up on the interest, right? And then tracking where developers are going is also another big one in terms of just the underlying chains and layer ones or layer two rollups, just to track where things are being actually built. So yeah, it's a wild new world. I mean, it's a full-time job though, just to track all the stuff
I
that's
was
going
gonna
on
say
there.
it'd be cool if you had that view alongside the financial view somehow. Can you are those able to be brought together, or they're different
You can,
systems?
yeah,
Oh,
you could overlay
cool.
price on alongside of all that other
Very cool.
kind of activity. So yeah, it's
Lots happening.
yeah, there's a lot happening, and I think we've got a good period here going into year end. I think on some of the setups in Ethereum, but Bitcoin
Yeah.
specifically.
Well, let's check in on a couple other headlines, and I want to zoom out and just get your guys' pulse check on state of markets overall. But some news coming out that the American Express Platinum Card fee is going up. It's going to be about $900, but it's got a lot more built-in perks. I've seen a lot of people talking about them in relation to Robinhood actually recently, of like people wanting the Robinhood card more than this status symbol. And I know Chase Sapphire a few years ago had their moment. So um I thought something I thought was interesting here is it includes a $300 credit to spend at Lululemon, which I don't even want to know what Lulu paid for that, but that feels like a desperation move of like, here's like, we just please wear our stuff. But they're making moves on that front. We also had the StubHub IPO go out. They had a bit of a bumpy ride. They had tried to get out a couple times. Most recently, Liberation Day ish timing. They tried to go, weren't able to do that. Again, of course, they go up against Live Nation, riding on the heels of huge concerts that continue to be a massive financial draw. And we had Cracker Barrel earnings yesterday. I listened to the whole thing. It was very interesting. They reported their foot traffic was down 8% after they changed their logo. And one of the analysts asked a really interesting question of like a breakdown of like the demographics. And I guess regionally, the biggest hit was in the Southeast. But by age cohort, it was the least amount of impact on 65 plus. So theoretically, the people who are like most likely to be kind of traditional and like going for years and years, maybe they're just less online than everyone else and they missed it, or they're like, whatever, I'm getting my biscuits. But that group actually was pretty solid. So it's just interesting, and just interesting to hear how like that backlash impacted like the economics. Like they were going to spend all this money on redoing all of the stores, and they're like, well, we're not going to do that now. So now they have all this money to spend on marketing. But that was an interesting one to follow. I think they have a tough road ahead. You sometimes with these earnings calls, you can like hear it in their voices. And the last line of the earnings call with the CEO was like, I just want to end by just saying thank you so much to all our employees. Like you just saw these people have been going through it. And yeah, that was a wild one to watch. So we got some interesting, things going on in AI and chips, but also, in Cracker Barrel land. And then rounding out the week, I know Evan, you have some big thoughts on just like the state of where we're at generally in the markets. I mean, I saw we have the push to maybe get rid of the quarterly earnings. Then I just saw there was an announcement around the SEC and limitations around class action lawsuits around IPOs. Feels like there's a lot kind of shifting in like sort of retail investors, how they engage with the system. I'm curious from your experience, what you make of like this current environment.
Yeah, I mean, just zooming out and thinking about this year in general, I mean, you had to get through Q1, which I know is yeah, that was a big hurdle, right? You had to emotionally kind of get through and overcome the first kind of tariff issues, the massive drawdowns, and detach yourself there. But if you could get through that, this has been a very Goldilocks market here. I mean, it's been an incredibly resilient market that we can't even get a 5% pullback at this point. So it's staying bid. Wall Street seems to still hate it. Professional investors are still largely uninvested. Retail is running the show again. We're in a seasonally weak month, right? And this is, everybody coming into September. Oh boy, this is September. This is the worst month of the year. Get ready, right? And what are we? We're up 4% or something. We're knocking on new all-time highs. Semis are breaking out again. Risk is on. Small caps are partying. rates are coming down. The dollar's been weak. I mean, there's so much good, and I don't want to be a blind bull because risks will accumulate, but if you can just detach yourself and stay invested this year from the news flow, this has been a remarkably resilient bullish market for risk assets, and I don't see why this doesn't continue into the end of the year and maybe even Q1. We'll have to pay for this at some point. The market's pulling forward a ton of good times, right? It's pulling forward a lot of these rate cuts and everything else that's happening. Some of the news you just said too. So yeah, we'll see. We'll pay for it eventually, but right now, just let the good times roll.
Enjoy the ride.
Looking at it. Yep.
Shay, you share this optimism that Evan has?
Yeah, I mean, AI is the main event, and I do think eventually we're gonna have that moment. I'm actually thinking it's 2027. It's not any time soon. Every quarter we get reminded how the hyperscalers just don't have enough data centers capability, and every time, every 3 months we're just getting reminded how real AI is and how much demand there is and how much more money needs to be spent there. And I think that's providing such a high floor in any kind of pullback. And I think it's also combining an element where I mean, we've had some like the ISM number, for example, the manufacturing employment index, like that came in very weak. I think it was like a 44, the weakest since the pandemic. And if that reported during a seasonally weak time like September, typically that would result in a massive sell-off because it would scream danger. Like historically, every time we got that low, it's a warning sign that factories are cutting jobs. We might be in a recession, and the market itself is going to follow. But it's different now, and I think that's what the point of AI is. Like stocks aren't reacting the same way because the playbook has completely changed this new digital economy, like we've been talking about for a long time. Like instead of just simply cutting jobs and producing less, companies are just cutting jobs and replacing that work with AI and automation. So like they're not really producing less anymore, but there's less headcounts and there's more efficiency gains. There's more margins to be pulled. So like you gotta think of it like factories are swapping people for GPUs. Like if you want to use that phrase, like its output isn't falling as much. Compute is doing what labor used to do, and right now the biggest winners are going to be the hyperscalers, the Nvidias, Broadcoms. Like these are major components of the indices now, and they're the biggest beneficiaries. So like if the biggest weight of the indices are just continue up to the right, that's justified because their earnings aren't that bad. Like they're expanding. Like it's not that expensive. Like the stocks might have been way higher now, but a year or two ago, it's probably similar valuation on the earnings multiple. Like it's just they're printing cash now. So I think that combined with weaker dollar, that's just gonna be super bullish for a lot of emerging markets plays as well. Small caps. Rate cut cycle has begun. We'll see how the velocity of it, but it's begun now. So I think that there's just too many tailwinds, and we also have a freaking president who takes pride in the equity markets. And when you have that, there's gonna be a lot more sovereignty deals towards AI, quantum space. Like there's gonna be so many headlines of like we're gonna partner with the UK, Europe sovereignty. There's gonna be some deal flow for space. Like it's just so much incentivization right now that eventually it will be a bubble. There's going to be a bubble because at a certain point you can't just continue having bigger pie. Like you go from lake to a river to now we're in an ocean. What's after an ocean? There's nothing really. Like this is a lot of pull forward demand. So I think 2027 is probably going to be the year where it's going to go through a digestion period. I do think the next digestion period will be prolonged. It's going to be kind of a multi-year one. But yeah, stay invested. It's the best hedge against inflation. Best hedge against AI is participating in the equity markets. And luckily, institutions also put too much weight into the macro data, and it's the most hated rally for that reason.
Yeah. I mean, that's fascinating, the point about kind of AI driving a wedge between the dynamics of how Wall Street and Main Street operate together. And one thing can happen over here, and it used to mean that something was going to happen over here, but with AI, that's not the case. I would read a whole newsletter about that. So maybe you guys can work on that at Futurum. But guys, thank you so much. A great show today. Good to see you, Evan. We will be back next Monday, 9 a.m. Eastern, with all of the market news and headlines. As always, Follow us on StockTwits, tweet at us, send us notes. Would love to hear your thoughts on what we talk about and what you like to hear about. And with that, we'll see you next week.